Hello and welcome to this eMart interview in the Engerati studio. I've got that all wrong, you can tell we're doing it live. It's the Engerati studio at eMart, but there we go. It's the end of the day, day two, and I'm now joined by Sándor Szalai, who works at Keler, and they're a clearinghouse. But before we start, Sándor, firstly, welcome. Thanks for making the time to be here.
Yeah.
I'll give you the job of introducing yourself because you do a much better job than I do. So, so please tell us what Keler does, what you do, and then we'll go into some of the issues that we want to discuss.
Okay. So I'm representing Keler Group, Hungarian-based clearinghouse. That's on one hand the Central Securities Depository, and on the other hand a CCP, which is providing services both for the securities and the energy markets. On the energy market universe, we cover both gas and power markets. By now, 5 gas and 9 power markets, and we are providing typical clearing and settlement services for clients.
And it's excellent that you're here because on that particular issue around clearing and settlements, we've had a number of analysts and commentators who've been sat where you are saying that there are some real issues and challenges that are coming up where regulatory and legislative, where trades need to be cleared from both sides and so on. Again, can you, from your point of view, how do you see that landscape, short to medium term?
The landscape, what we see, that's let me use that expression, that's regulatory tsunami, what we're experiencing nowadays. So all the trends are moving towards a higher level of integrity, higher transparency, and of course lower risks. So trades can be connected and netted in a way to avoid risk, to avoid losses. Which is of course welcomed also from our side. However, those legal directives and initiatives, which are really a lot parallelly with each other, that really increase costs and makes a lot of headaches. Also for us and the clients.
So on that point of increasing costs, can you just bring that to life for us a little bit? How is it increasing costs? Because I imagine that the regulators are trying to do the right thing and mitigate risk and everything, but what is it that they're doing that is increasing costs?
Let me say a very easy example for you. One of an issue nowadays, that's reporting on the energy market. What the European authority did in the financial area, this is EMIR, the regime, the same thing has been done on the energy markets, that's REMIT. Which means from this October, all the standard trades and transactions should be reported to a unified European infrastructure called REMIT. And you are asked to be compliant with all the REMIT requirements, which means a very significant IT development requirement. And of course it means a lot of costs. You need to do that.
That IT development requirement, is it for? It's not just from the clearing side; it's also from the trading side. It's from everybody.
Yes, and reporting side. So we have to collect all the data of the trades at the moment from the let's say stock exchange marketplaces, and from April also from the OTC, and report it to a unified European infrastructure, which is REMIT, controlled by ACR.
But again, surely the vision of having a central structure, one reporting framework, one sort of communication language to do all of that on a very top level sounds like it should save costs in the long run, right? So is this a short-term thing or a long-term thing?
I would say, and I would agree, in the long run, yes. Of course, headaches arise in the short run.
Sure.
Yeah, because for this purpose, 6 trade depositories have been set up in Europe. And the supervisory authority should be connected to all the trade repositories and collect the data, screen, analyze, and provide feedbacks. And national regulatory authorities should do the same. They should be also connected to the trade repositories and monitor their national landscape, identify risk, and give the feedback to the market. That's theoretically a very good thing. We hope in the longer run it will work well. However, now in the shorter run, that's a very, very, very big challenge.
Isn't that one of those things where actually one of the issues is that people are coming to this or have a different pace of, all of this works when everybody's on it.
Sure.
But it's very painful when people are on it, not on it, half on it.
Definitely.
Do you know what I mean?
Yeah, however, under that regime, everybody is asked and forced during a certain time period.
So what's the deadline?
Well, the deadline for the so-called standard trades done on the stock exchanges, that was 7th of October for this reporting.
And everybody complied?
Either complied or they are working on it, and then they have a so-called backloading period, when they have to backload the trades. This is January, so very, very tough deadlines. And then the OTC trades, which really raise the issue of transparency and integrity, how to monitor the prices, how to be really compliant, and so on. This is from 7th of April, so we have tasks enough.
So you've got a big job on your hand. I don't want to dwell on this too much, I want to move on, but before we do, one of the other things that was brought out is some of the issues about clearing trades.
Yes.
That both sides have to clear the trades, and there's a feeling that is a piece of legislation that was brought in because of banking transparency rather than trading transparency. I mean, how do you see that very briefly affecting what you guys do?
Well, I think that's both.
Right.
That story talks about both the banking and the trading transparency, and the big question is who is the service provider which provides that services, and now we see a quite clear trend on the market, which is, well, I would rather say not a trend, but dilemma. How to provide these services, and we see, for example, very big service providers like big banks who have such a desk which provides clearing and settlement services for the energy markets. Now they are hesitating what to do with that services. Some of them decide to remove that range of services from their service portfolio, and of course at that point we see certain opportunities. We as specialized service providers like a specialized clearing house.
And that's why you said is another area of excitement, this gap in the market that's almost, well, I wouldn't say opening up, but due to the hesitancy of the bigger banks, is allowing sort of specialized entities to come up.
Yes, and not only the banks rise this issue, but also the clients, because let's have a look at the smallest traders. Smallest traders with a certain annual revenue, that's not an optimal client for a big operation.
Sure.
Those small or mid-range players might be better connected to a service providers which are smaller, however much more specialized for that industry.
And the benefit of that specialism is what? What does someone get?
That's very simple.
Yeah.
If I talk about a big bank, then I have a number of divisions, a number of service packages, and for example, within our house, this is the core. Right. So we are concentrating on it. We are developing our human competence, our IT systems only for that service.
And your understanding. So what's the role of the big banks then? I mean, in your mind, I mean, what do you think they should do? Should they be partnering with people like you, or rather than?
Well, I have a more or less clear vision of that. It's not. It's not sure that this is right, but I think
it's your view,
that's my view. Yeah. I believe that big players will be playing with big trainers, let's say, which means the big clients will choose big banks also afterwards, right? Because the revenue which they are generating for those service providers, that's really relevant, and due to the certain lines of cross-sellings, those are very, very valuable and optimal clients for big ones. Smaller ones might be better for smaller service providers.
So who are you looking for? I mean, who is your optimal client? I'm not saying you're small. You're reasonably large, but
small and middle size clients on the energy market. Guess, and let's talk about the energy market now, because that's the topic of the forum. Who are looking for clearing and settlement services, who are looking for reporting services, and who are looking for a so-called third-party service aggregator, which concentrates many of the stock exchanges, concentrates many of the smaller clients, and able to optimize costs. That's more or less my vision.
And just as we're finishing off, one of the other things you mentioned, and it's another big talking point actually within the forum, is the sort of Eastern Europe to Western Europe type, I don't know, move, connection, whatever it is. So just sort of, as the last part of that, I mean, your clearinghouse from Hungary, you're clearly making connections to all the other western part of the market.
Several of the Western European exchanges and so on.
Why is this such a big deal? I mean, to me, it just makes sense, right? Because at the end of the day, everything's going to become interconnected. So.
Because if the markets are connected, that's not a default setting at the moment on the energy markets, because that's not really the landscape which is typical for the financial markets. But if the markets are connected, if the coupling on the markets are operating, if the trades and pricing are transparent, then optimally and of course theoretically, even the smaller players can optimize prices on the eastern part of Europe, for example, through purchasing power from western part of Europe.
Okay.
Which is an optimal way. Of course, a lot of connectors and connections still missing. However, it's a really very fast-moving landscape.
But your view is it is something we're going to get to. There's too much momentum.
I think yes.
Okay. Sándor, on that note, we're going to have to leave it. We've come to the end of our time here before all the clanking and rattling starts in the background as people start to break things off. Thank you for making the time to be with us.
Thank you very much for the invitation.
It's good. And thank you as well for watching.